What's up, guys? I just wanted to update you on a pattern I see forming in Bitcoin right now. This is a strategy that I've learned from Jared Wesley of Live Traders. So I want to show you a clip. He has a really great channel. I really encourage everyone to watch this, and also his other videos about technical analysis. So before I get into Bitcoin, I want to show, it's a little bit longer clip, but I think it's really, if you're interested in technical analysis, going to be worth a few minutes of your time to really get an idea of what type of pattern we're seeing in Bitcoin right now. All right, here we go.
What is a 3 and 4 bar play? Okay, what is this pattern that's been talked about so much? This next slide is directly out of PTS. Okay, this slide is directly out of PTS. Okay, remember I said there's about 5 or 10 slides out of 525 that are directly out of the course book? This is one of them. Okay, the 3 and 4 bar play, guys, one of the most important aspects of this pattern is the number one bullet point right here. Bar number one. This is extremely important. I'm tired of people sending me 3-bar plays that are not 3-bar plays. Bar number one must be, not should be, not might be, not could be, must be a wide range igniting bar, right? It has to be igniting a new move, all right? You're not going to get a 3-bar play that's up 7 bars in a row, magically puts in a little red bar and then goes higher. I've been getting a lot of that where people are showing me moves that are up 4 bars. There's a tiny little red bar after 4 huge bars, and then, oh, look at the 4-bar play, look at the 3-bar play. Okay? That is not it. Okay? So igniting bar means, just in case you're not sure, the first or second bar of a move. This is extremely important. It has to be the first or second bar of the move. Okay? Wide range bar means it should be at least double the size of an average bar. Now, the reason there's not a number attached to this is because every stock is different, right? A wide range bar on Amazon might be $4. A wide range bar on Bank of America might be 25 cents. Right, so just take a look at the rest of the bars on the chart. Take a look at the rest of the bars on the chart and go, wow, the average bar looks to be about 20 cents. Wow, this bar is 50 cents. That would be a wide range bar, roughly double the size of an average bar. Okay, this bar should have increased volume, but it's not required. Increased volume equals increased commitment. Volume is commitment or lack thereof commitment, okay? So I'm spending so much time on bar one because this is the bar most people mess up, okay? Most people seem to understand bar 2 and 3. They mess up bar number 1. And there's going to be enough examples today that you should never mess up bar number 1 ever, 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 ever again, okay? One of the things I would like you guys to do, and I'll repeat this later on, is when you decide in your trading plan that you might want to take a 3-bar play. Say that's part of your trading plan, because there's a lot of different patterns we teach at Live Traders, okay? You want to take a picture of a perfect 3-bar play, and you want to put it on your wall. You want to take a picture of a perfect 3-bar play, and you want to put it on your wall. And every time you go to take a 3-bar play, look at the wall and go, do these pictures match? Does the picture on my platform match the picture on the wall? Okay? All right, so one of the things that's also important, guys, all right, and John, I was going to get to that later, but I'll get to it now. I actually have a slide over it. The wick is part of the bar. Unfortunately, none of these have wicks on them. You will see some examples. But the little topping tail, little bottoming tail is part of the bar. Okay? Guys, this is just the body of the bar. But the entire range of the bar includes the wick on the candlestick. It absolutely includes the wick on the candlestick. So if the body of the bar high is $50, but the total high is $50.20, you use $50.20 because that's the high of everything. All right, now on to bar number 2 and 3. Bar number 2 and 3 must be in the upper 50% of bar number 1. What that means is if I go down to the example here in the bottom left, you see a green bar, a red bar, and a green bar. That means this red bar has to be at least in the top half of the green bar's range. So let's just say this bar is $1. This wide range green bar is $1. That means the red bar has to be in the upper 50 cents because that's the upper 50%. Otherwise, it's not a resting bar. It's an engulfing bar. Okay, so bar number 2, and if it's a 4-bar play, bar number 3 as well, if it's a 4-bar play, they have to be in the upper 50%. It's preferable, hear me out, it's preferable if they're in the upper 25 or 30%. The smaller this bar is, the better, right? And now, obviously, we'll talk later about spreads and things of that nature, but as long as it's in the upper 50%, you're good, okay? They should have relatively equal highs, okay? So if the high of bar number 1 is $50, you want the high of bar number 2 to be about $50. If it's at, 50.02 or 49.97, that's fine. But if bar number 1 high is 50, bar number 2 high cannot be $50.50. That's 50 cents different. Okay, it's 50 cents. They have to be relatively equal highs. Now, obviously, if it was on a daily chart, you'll be a little bit more flexible. If you're trading a 2-minute chart, pennies matter. Nickels matter. Okay, so it has to be in the upper 50% of bar number 1, and it has to have a relatively equal high. Okay, bar 3 and 4 now. This is the trigger bar. This is the entry bar. This is the trigger bar. This is the entry bar. Yes, I repeated myself. The stop loss goes under the lowest bar. Whether that's bar 2 or bar 3, the stop loss goes under here. The question I've been getting frequently is, when do you get in? You get in the nanosecond that bar number 3 breaks the high of bar 1 and 2. As soon as bar 3 breaks the high of bar 1 and 2, you enter the stock and you place your stop loss down here below bar number 2. You enter as soon as it breaks the high of bar 1 and 2, and you put your stop loss below bar number 2. That's it. If it's a 4-bar play, you enter the same way. You get in above bar number 1 or 2, and your stop loss goes below the lowest of these 2 bars. If bar number 2 is lower than bar number 3, you go below that. If bar number 3 is slightly lower than bar 2, you go below that. Entry right here. Put my cursor on it right there. Stop loss down here. Note, the color of bar number 2 or 3 doesn't matter. I don't care if bar number 2 is a green bar. I don't care if it's a doji bar. I don't care if it's a bottoming tail bar. I don't care if it's a topping tail bar. I don't care if it's a red bar. As long as it has a relatively equal high and is in the upper 50% of bar number 1. I'm speaking slow and clearly because I don't want you guys to mess this up. The play is valid on longs. It is also valid on shorts.
All right, now that you guys have watched that clip, if you're still with me, I see a 3-bar play forming on Bitcoin right now. So as you can see, we have this wide range igniting bar breaking up above this previous resistance here. We do have volume coming in. I would have liked to see a little more volume, but we do have greater volume than we have had in some of these previous candles here. So this second bar here is the resting bar. So we see we've got this little small red candle here that is formed. And so the next bar is going to be the key to where this pattern takes us. And I wish I could tell you guys exactly where Bitcoin is going, but I can't. I can just read the patterns and give you probabilities based on these patterns. So all I can say is if this happens, then I expect this to happen. And that's not always guaranteed. It just puts the probability in your favor. So if we see this third bar break above this first and second bar here, I expect the crypto markets to go crazy. So I'm particularly watching specifically Bitcoin as the driver of the remaining coins that I'm watching. If this does not accomplish a breakout above here, then we could see a failure. In addition, one rule of trading is the volume is key. If you have a large breakout bar without the volume coming in, these often fail. So you want to pay particular attention here to the volume. So just to summarize, if this bar, this third bar, breaks out above the previous high on volume, we're likely to see a complete reversal here and a breakout for Bitcoin and the remaining cryptos. If we do not see volume coming in here, and if we do not get above this previous high, you also saw there's a 4-bar play, so we could have 2 resting bars. So if this bar doesn't break out, that's not a killer. But that 4th bar, then, the bar that will form tomorrow, will be the key. So we need to see a breakout either today or tomorrow on volume. Otherwise, we could see this pattern fail. And a lot of times, markets do like to do this. They'll try to trap you, basically. They'll break out, trap everyone long, and then you'll get flushed out really quickly. So I can't predict which way these cryptos are going to go. I wish I could tell everyone. I wish I knew myself, but all I can do is put the probabilities in my favor and see that if certain patterns play out, then other things are likely to happen. So that's what I'm seeing here. It would be really cool to get this perfect 3 or 4 bar play here, but again, we'll have to see what happens. So I hope this lesson from Live Traders helped, and I hope this gives some context to what I'm seeing in the Bitcoin market right here. Thank you all for watching. I appreciate it. If this helped at all, please give me a like, consider subscribing, and take care, and I will see everyone in the next one.